Hello and welcome to the DGO Gold Investor Webinar. I'm Paul Armstrong from Reed Corporate. Thanks very much for joining us today. Today's presentation is designed to update the market on what is a unique investment opportunity in Australian gold exploration. DGO has a two-pronged strategy to create wealth for its shareholders. The first of these involves investing in ASX-listed companies with strong exploration projects, and the second is via exploration in its own right. This strategy is proving highly successful, as shown by the rise in DGO's share price from 80 cents to $3.30 over the past year. Much of this increase reflects the company's highly rewarding investment in WA gold explorer De Grey Mining, where DGO has provided big doses of both capital and exploration expertise to help underpin De Grey's success in the field. And that's a factor which sets DGO apart from most of its peers. The company has extensive skills and experience in both the corporate and exploration spaces. DGO Executive Chairman is Ed Eshues. Ed is one of Australia's most successful modern-day explorers. He led the teams that discovered the Plutonic, Bronzewing and Jundee gold deposits in WA. Ed has also played a pivotal role in De Grey's exploration program and been a key factor in that company's huge success. Importantly, along the way, Ed and the DGO team have built a huge understanding of gold in the Pilbara, giving DGO invaluable intellectual property which it can leverage elsewhere to generate exploration success and create more wealth for DGO shareholders. DGO Executive Director Bruce Parncutt has more than 40 years' experience in investment banking and stockbroking. In this time, he has raised vast sums for resources companies. This combination of extensive corporate and exploration success puts DGO in an enviable position. The format of today's webinar is that Bruce will begin the presentation and then hand to Ed. Please feel free to send in your questions as the presentation takes place. Do this by clicking on the Q&A tab on the right side of your screen. Please don't wait until the end to lodge your questions. That way, when the presentation ends, we can move straight into questions. I'll now pass to Bruce. Thanks, Bruce.
Thank you, Paul, and thank you everyone for joining us this morning. We really appreciate your interest in our company. DGO is basically a gold discovery company. We're in the business of discovering gold. You'll find we also have a couple of prospects for copper, but the primary objective of the company is gold discovery. And as Paul has just said, we have a two-pronged strategy which involves both brownfield and greenfield exploration. We have a strategy for both, as you'll see. This first slide is just a snapshot of where we're at today, and basically our brownfield and greenfield strategy has delivered, amongst other things, a 16% strategic stake in De Grey Mining with its Hemi discovery. De Grey Mining today has a market cap of about 1.7 billion. Our stake's worth about 273 million, which is greater than our market capitalisation today. De Grey not only has a major discovery at Hemi, but it is sitting on a major company scale land position in what we now regard, and I think what people regard as a world-class tier 1 province. It's new, it's early days, but it's pretty exciting. In addition to that, our greenfield strategy has now delivered us a number of targets which we'll be exploring over the next 12 months. We have 9 targets that have come to us via a joint relationship with Sensor, which is using artificial intelligence and machine learning technology to generate 9 targets so far for us to explore with them in the Yilgarn of Western Australia. They're all gold targets. And we have 3 100% owned prospects of our own, which have now evolved and have matured to the point where initial drilling has started and will continue over the next 6 to 12 months. The next slide just is a further snapshot of just who we are. About 70 million shares on issue, market cap of about 240 million. As I said, that's less than the market value of our holding of De Grey shares. So in a sense, and we've got cash as well. So in a sense, you get everything else that we're doing arguably for free. I'm going to talk briefly about our strategy, and then we'll talk about how that strategy is working out in terms of, particularly in terms of activity and further wealth creation activities that we're engaged in now and for the foreseeable future. Again, another quick snapshot of us, really just to observe the values of our various holdings. Our Greenfield exploration holdings were valued for us earlier this year because we did a transaction that required an independent expert's report. So it gives us a chance to put a valuation on the company. It says before taking tax into account, we're worth $4.13 per share. We're trading at a significant discount to that this morning. But the point here is to just note that 85%, 84% of the value of our company is tied up in our shareholdings into grey mining and NTM gold. NTM's become relatively minor in relation to grey mining. Just a quick recap on our strategic objective. As Ed and I have worked together to create this company, we set out that our objective was to create shareholder wealth growth through a discovery leverage exposure to the gold price. Firstly, we've got leverage to the gold price. Resources in the ground, whether developed or undeveloped, if you work out their value, if you use net present value type calculation, typically that value is about twice leverage to the gold price. If the gold price there were to go up 10%, you'd expect the value of the gold resource in the ground, whether it's undeveloped or developed, to go up by about 20%, so about 2-to-1 leverage. You've seen that this morning. Gold shares around the world have fallen by 5% when the gold price came down to 2% over the last 24 hours. So leverage works both ways. We've added to that discovery leverage. We're looking for tier 1 discovery opportunities, tier 1 being a gold mine that produces at least 300,000 ounces a year over a 10 to 12 year time frame. So if the gold price doesn't move, we're looking to continue to create shareholder value through discovery. And then just recapping our dual strategy of brownfield and greenfield. Our brownfield strategy, I think the most important thing to perhaps stress here is that our brownfield strategy is not about investing in listed public companies per se. It's about trying to identify opportunities for brownfield exploration. They just happen to be all owned by listed public companies. We found that we couldn't go and get our own ground for brownfield exploration. We define brownfield a bit more broadly than many. The traditional basis for brownfield would be that you'd be drilling within inside of the head frame of the mine. It's the mine owner's exploration within their own mining lease. We define it as drilling in ground along a known structural trend, geological trend from existing gold resources. So you know that the trend contains gold, you just need to go exploring for more of it. We found that this exploration is lower risk. There are lots of examples that show us that the potential is for returns of greater than 50% per annum compounding over 3 to 5 years from success. And our strategy has been to invest in the companies that are doing brownfield, that we take an influential shareholding. For our greenfield exploration, we're basically disciplined about where we allocate our capital. And we're looking for things that have world-class analogues. So we're looking again for tier 1 discoveries where the analogue suggests we could find something large and meaningful. Importantly, given the balance of our portfolio now, we're spending in the next 12 months, we'll spend less than 3% of our market value on exploration. So the risk is essentially contained. But as you'll see when Ed talks, that many of the things we're drawing, in fact, all the things we're drilling could be company making if we're successful. Just a couple of insights into what's created our strategy. The first is that we have to date focused on Western Australia for all sorts of good reasons. There's still a lot of gold to be discovered in Western Australia. We understand the sovereign risk. There's a world-class gold industry in Western Australia. There's access to skills, data, technology, and infrastructure. And perhaps the dot point we didn't include here was that Ed Esches has spent a lifetime exploring for, developing, and producing gold in Western Australia. So there's a knowledge base that's very significant to what we're doing. The other insight was really that we've wanted to build this weighting to brownfield discovery. The data, as I'm about to show you, shows that finding costs are low, and we think the risks are fairly low. And as I said, the success generates pretty high returns. This is perhaps one of the important pieces of information we'll show you this morning. Part of our brownfield strategy, as Ed will outline, involves us looking at every listed company in Western Australia that has exposure to gold exploration. Of those, about 40 have meaningful brownfield exploration projects. And this chart shows data from about 15 of those companies where their activities have generated a growing resource base, so we can calculate how much they spent on exploration for how many ounces they discovered. So it gives us their finding cost. Most of these companies don't actually talk about their finding cost, which we find intriguing. But it's interesting. What this shows is that, with the exception of a couple of outliers on either end of this chart, a dozen or so companies with meaningful brownfield projects in Western Australia are finding gold for between $10 and $20 per ounce in the ground, inferred resources of gold. If this were a risky activity, one senses that the dispersion of cost would be much greater. So this has given us the courage and the confidence to invest in some of these brownfield discoveries. And as Ed will say, we continue to look at the two in green are the two we've invested in so far. And it shows their recent historical finding costs. This is just a couple of recent brownfield discovery value creation. Gold Road discovered Gruyere in 2013. Over the subsequent 5.3 at a cost of $18 per ounce, it created a gold resource which created a shareholder value of $500 million and an internal rate of return over that 5 and a bit years of 40% per annum. Capricorn, I won't go through every example in detail. Bellevue is a more recent one, which is discovering gold. It continues to add ounces at about $20 per ounce, and over the last 3 years has created about $600 million of shareholder value. And we put De Grey in here. It's only since the beginning of this year, but since the beginning of this year, De Grey's created about nearly $1.5 billion of shareholder value. His historic finding cost in the Pilbara is about $15. We think this year its finding cost has probably been lower than that, and we expect that trend will continue. And just to sort of summarise where we're seeking to create shareholder value, firstly from brownfield exploration success, which we believe has fairly high probability outcomes. You can more or less predict how many ounces a company's going to find by how much they spend and what you expect their finding cost to be. So we're getting resource growth from our brownfield exposure, and now particularly in De Grey, where the resources are growing quite rapidly. And value is being created because the finding cost is about $15, and every ounce discovered is being valued by the market, we think, at least $100. And ultimately, a developed resource, a developed tier one gold mine is valued by the market at about $250 to $500 per resource ounce that backs that production. We're also going to create shareholder value with greenfield exploration success. As I said, we're not betting the bank. We're spending less than 3% of our market cap. So our corporate risk profile is low, but the potential upside is significant. And of course, we have this gold price leverage, which we strive to have. Most of the asset bases of DGO today is represented by our shareholding in De Grey, and De Grey in turn is represented by resources in the ground. So we would expect to have this leverage to the gold price. And if you're a gold bull and you expect the gold price to be performing a long way from here, then we believe that we will have exposure to that over time. This is just, and Ed will go into this in more detail. This is just to let you know what activity we have exposure to over the next 6 months. De Grey have got 6 rigs operating. NTM have got 1 and potentially 2 rigs operating on their ground. The Yilgarn exploration is currently drilling with 1, I think, rig at the moment, but from time to time it might have 2 rigs, and that will be mostly continuous across those 9 targets. And we expect to be drilling in 2 of our 3, and maybe even in all 3 of our targets between now and Christmas time. I suspect there aren't many explorers listed on the Australian Stock Exchange that can boast exposure to that much drilling activity and opportunity. But basically, shots at goal, as they might say in a sporting parlance. I'm now going to hand over to Ed, who's going to talk about the implementation of our strategies, both brownfield and greenfield, in a bit more detail. Thanks, Ed.
Yeah, well, thank you, Bruce, and good morning, everyone. As Bruce alluded to, we looked at a large number of gold explorers in Western Australia, but with a particular filter, and that was, in the end, we wanted to be able to invest in prospects where we thought the gold discovery cost was less than $20 an ounce. where the land had potential for plus 5 million ounces, and there was a very large land position. And in the end, we first up invested in De Grey. De Grey came out as the number one, and this is more than 15 months ago. And our second pick was NTM for slightly different reasons, but it still met our criteria. And there's some 3 to 5 other target companies that we are maintaining very close watch on. In fact, we do that on a daily basis. So the brownfield discovery activity, of course, is related to De Grey and to NTM. The historic discovery cost for De Grey is about $15 an ounce. There are currently 6 rigs, as Bruce mentioned, active in this area, and it's become, obviously, Hemi has become a tier 1 target, and the whole Malina Gold Province, of course, has now been opened up as a potential large gold belt. NTM at Redcliffe is just north of Leonora. They've got 1 to 2. They've got 2 rigs operating at the moment, and their finding costs are about $20 an ounce. They're in a unique position in that there's 4 processing plants within 50 kilometres of the NTM land, and this is one of the main reasons why we invested. And each of those plants, we know publicly, have spare capacity to process ore. So that could become a very interesting play. In terms of De Grey, it's got 200 kilometres of structures, largely undercover. Hemi, of course, was found in late last year, and drilling activity has been quite furious over the last 6 months, and coming up with incredible results. The average finding cost, as mentioned before, in the Malina Gold Province has been around about $15 an ounce. We went there because we saw it was a strategic land position, which was comparable to the Yandal Belt. The Yandal Belt we can publicly disclose 17 million ounces, but it's well known that the Yandal Belt has an endowment of some 25 million ounces of past production and current resources, with the main discovery, of course, the main operation being at Jundee at the northern end. DGO has an influential stake. We have 16%. And Bruce and I are on the board of De Grey with 4 other directors. So what does the Grey land position look like, and what did it look like? When we first invested about 2 years ago, well, it had these structures in red lines. It had gold mineralisation, the full strike extent of it, and DGO in itself had acquired land at the western end based on what we were looking for, sediment-hosted gold in anticlinal structures, which were going to get tightened up in these major east-west structures that you can see running across the map. All the gold deposits in the Pilbara until the discovery of Hemi were small. As a consequence, investors and academics, geologists, thought that this meant that future deposits were also going to be small. Well, of course, that's been turned on its head. Just to give you an idea of the scale, you've got Kalgoorlie in the bottom right-hand corner. Kalgoorlie, of course, is 100 million ounces. So there's plenty of room in the Malina Gold Province to continue to add ounces through the exploration that's ongoing at the moment. The Greater Hemi area, Hemi was discovered under 30 to 40 metres of cover in this area marked in by the circle. It was discovered as part of a regional widely spaced drilling program, looking very specifically under the cover, but in an area where gold was known. So Scooby to the northeast was known, as was Antwerp at the at the southwest end. And this 15-kilometre long area, of course, is now the main focus of De Grey in the short term. There's evidence of other gold mineralisation close by at Shaggy, etc. What DGO does on a regular basis to make sure we understand what our investment in De Grey is about, and that we actually model the public domain drill hole data and do our own internal resource estimates to keep abreast of the drilling as it progresses. That gives us the confidence to maintain our position. You can see on this diagram the scale. The Yandal belt at the bottom half of the page is at the same scale as the Malina Gold Province on the top half, and it's an interesting parallel because when Bronzewing and Jundee was discovered in the Yandal belt, it also had about 1 million ounces in small deposits at Mount McClure and at Darlow. The situation, of course, at De Grey was De Grey had nearly 2 million ounces in small deposits, but the gold mineralisation, as you can see, was widespread, and that's what led to our interest. That's the interest of Bruce and I to actually look in real detail at De Grey, and which led to our investment some time ago. With De Grey, DGO's put some $45 million investment into De Grey, and most of it at a time when others weren't prepared to do so. Just quickly on NTM, as I said, NTM's within trucking distance of Red 5, Saracen, Dacian and St Barbara operations. It's a 40-kilometre Mertondale shear structure. At this stage, it's got about 700,000 ounces of resources. The deposits are not that large, but recent drilling at Hub has continued to get high-grade results. We have a 13.6% interest and one board position, and our 60 million options, which is just out of the money, would take us to 20% should we exercise those. So DGO is in a very handy position on the NTM register. Now, let's just focus for the moment now on our Greenfield strategy, which has come together. It's taken about 5 years to get to this point, and it's largely based on looking for sediment-hosted gold and or copper in areas undercover, with the principal focus, of course, in Western Australia, but we've also progressed to the Stuart Shelf in South Australia. The same criteria as we applied to the brownfield strategy applies here. We're looking for geological analogues to world-class sediment-hosted deposits. We want to see the potential for 5 million ounces, and if it's all possible, in close proximity to existing infrastructure and processing plants. And it's actually turned out that way. So what are we doing at the moment? Well, the level of activity is very active in that we have entered into a joint venture with Sensor, where we have a 40% interest, and drilling is ongoing now for the next 6 to 12 months of some 9 targets. Our own Malina land in the Malina Basin Province, Gold Province, we have 30 kilometres of structural trends, whereas De Grey have some 200 in total. And then we've got Urida at north of Meekatharra in the Murchison, where we're looking for gold and Agrusa style copper gold mineralisation. Agrusa, of course, is only about 50 kilometres from where we're exploring. And last, Panati is a sediment-hosted copper strategy on the Stuart Shelf in the Olympic copper domain. We've now got 100 kilometres of target zone we've identified, and we're working through the process of getting ready to drill that. Coming back to Yilgarn, you can see the extent of our interests here. The main focus at the moment is at Desdemona, which is south of Sunsagolia. It's only about 8 kilometres south of Sunsagolia. And the sensor machine learning, artificial intelligence that was applied to the data identified a target of a tier 1 target of scale just 8 kilometres south, and drilling is underway. At Darlow, north of Darlow, similar. Again, this is undercover. Both Desdemona is undercover. North Darlow is a target under a shallow salt lake. Very interesting geological position, irrespective of what the machine learning has identified. And this applies to all the other targets within this portfolio. So Sensor are managing this for us. They've got experienced geologists on the ground, very experienced geologists in compiling this vast volume of data, because you have to remember that there's some 50 years of modern day exploration has occurred in the Yilgarn, and that data has been compiled, has been cleaned up, and has been integrated with research and other modern data for the machine learning to occur and to identify the targets. We're very optimistic about the potential outcome of this strategy. Coming back to the Malina Gold Province, you can see the De Grey land in grey, our land in orange. This is where the yellow gold dots represent where gold is known. We've commenced drilling in there in the Scotty Well area on the western end. We have some encouragement from the drilling, geological encouragement, which is giving us the confidence to continue on with the exploration there, and likewise with this the eastern area that we've got there. In some detail, you can see the important anticlinal structures that I was referring to before. They have this northeast trend, and they run into these major east-west structures. And it's this sort of stratigraphic structural position where there's potential for very large gold deposits. To date, we've intersected some silver mineralization, which is very interesting and very encouraging, and we'll be following that up within this overall area. The area out to the east, the purple dots you can see represent intrusives, and these intrusives could be Hemi lookalikes. They're all undercover. We've done no drilling in this area to date, but of course it's adjacent to Taorana, which is the grey body, 524,000 ounces in an intrusive. So the logic is clear. The analogues are very compelling. So we are working on getting heritage clearance so that we can continue exploring on our own right within these areas that DGO holds 100%. The Eurida is northeast of Meekatharra in the Murchison, and to date we've been working here now for about 5 years, again pulling together all the past exploration data. Some large companies have explored here. This is difficult land because it's largely undercover, but we've identified 8 targets in the classic geological position to make discoveries of both the Grusa style VHMS mineralization and Zambian copper belt sediment hosted gold copper deposits. We've been drilling at Eurida, and we've got some real geological encouragement there, and we'll continue to follow all of those targets up. What's really critical is that in the soil sampling results, we get anomalous tin, barium, and thallium, and you say, well, what does that mean? Well, this actually tells us that we've got degrissa type mineralization evident, because that's what you find in the soils at degrissa. So we're greatly encouraged by these results as well. And just to illustrate the point, perhaps at Yerida, we got 132 metre intersection going 1.3 gram per tonne silver. That, of course, is not an economic result, but geologically, that's very encouraging. And this is a diagram to give you a sense as to where we need to go next with our drilling. We don't know whether there's a VHMS target there, but if it is there, that's where it should be. So that's where our next round of drilling will focus, and we should be doing that within the next month or so. Just a moment. And lastly, Panati, the Panati Shelf, Stuart Shelf area in South Australia. We now have a very large land position as a consequence of adding to our initial 100% land, a joint venture that we've entered into and announced earlier this week with Investigator. And this is the combined land position. It's some 4,000 square kilometres. It's in close proximity to Carrapateena, which is, of course, a different style of copper deposit than what we're looking for. But in any event, the infrastructure is close by. And to get to the point where we are now, we've engaged experts like Stuart Bull, who's worked in Zambia, has a very intimate knowledge of the nature of that world-class copper province, and we're applying his knowledge combined with the local knowledge to foster our exploration activity. So what does the Zambian copper belt deposit model look like? This is a cross section, and so here we've got the Pandura Formation, which is sandstone, and overlying that we've got dolomite, which is shallow water, and the Tapley Hill shales, which are deep water. And if we draw the analogy with the Zambian copper belt, it's the transition zone in yellow that is the target, where you go from shallow water to deep water sediments. Now, interestingly enough, that was the concept. Then we went looking for all the past exploration data, and we found that Selection Trust, an English company based in London, but it spent a lot of time in Africa, came to Australia during the nickel boom, and then went on looking for sediment-hosted copper on the Stuart Shelf. In 1975, they drilled a hole which confirmed the concept. But Olympic Dam was found in 1975, and so Cell Trust went looking for Olympic dams in the basement. So this, in the bottom right-hand corner of this diagram, and then after time didn't succeed and went elsewhere. But again, proof of concept has already been established. The area that we're going to focus on our exploration is now 100 kilometres in strike. This is the area in yellow. So there's your dolomite, the blue. The grey on the east side is the shale, and the transition zone, as mapped as best we can from past drilling activity and geophysical information, is outlined in yellow. As it turns out, there's no drilling at all within this now 100 kilometres of transition zone that we've identified. We, of course, initially had the small block to the at the top right-hand corner, and by adding the Investigator land, who were looking for Olympic Dam type mineralisation at Masland here, we've now added that to our portfolio. And fortunately for us, Investigator do have native title agreements. They have so we can now get heritage clearance, whereas we don't have that as yet for our own land. We have heritage clearance on our own land, but we don't have a native title agreement. the reverse is the case for Investigator, which is this zone through here. They've got a native title agreement, but we need to get heritage clearance for the drilling activity. So we'll be able to drill relatively early on the Investigator land. The reason why, of course, we haven't been able to get a heritage agreement, native title agreement on our own land is because of COVID-19. But obviously we've jumped that hurdle by, in fact, entering into a joint venture with Investigator, and we have the right to earn 80%. We're committed to 350,000. That again will prove the concept. I expect that we'll be going on from there, but if the results within their land disappoint, well, we don't need to continue on with our exploration expenditure. So basically, just where am I? Just a moment. Okay, that sort of sums up the Greenfield's play. And how we approached the brownfield investments. So you can see now that we are where we are. We have a 16% interest in De Grey. It's cost us 43 million to date. Admittedly, some of that money went in when no one else wanted to participate. We've been rewarded with the success of the discovery of Hemi. NTM, slightly different situation, but there's an interesting play developing there. And then our Greenfield's result is valued on the independent valuation. So we have a fully diluted market value at $4.13 today, with De Grey at $1.34 and with NTM at 8.6 cents. That is really what DGO is about today. So just to recap, brownfield strategy is based on investing in companies because they have the brownfield land. Greenfield strategy is to look for world-class analogues undercover in areas of known clear geological understanding, with with scale a real possibility, and high risk but low cost to get to the point of knowing whether there's a discovery that's going to be made or not. So at that point, we're open up for questions. Thank you.
Great insights there into what is, as I said at the outset, a unique proposition among ASX listed companies, that concept of blending exploration in your own right alongside investment in other companies. It certainly gives DGO a level of diversity that's pretty well unparalleled at that end of the market. We do have a couple of questions coming in. I will take the liberty of trying to direct it to the right one, Bruce or Ed, but should I miscue that and that should go somewhere else, please feel free to jump in. Our first question today is DGO in for the long term with respect to De Grey? Does it intend to see De Grey through to production? Bruce, perhaps you could respond to that.
We're going to be there for quite a while, I think. Look, we don't perceive ourselves as being a production company. We perceive that we're creating value out of the exploration phase. There's a long way to go there with De Grey. It does have a world-class land position. They can be explored there for a long time. So we haven't got a decision as to when we would exit, and we do believe that there's a good reason for our shareholders to stay the ride. One thing we didn't show in this presentation, which we've shown previously, is a chart of the share price history of Gold Road after they discovered Gruyere. And there's a 7-year period from discovery of Gruyere to going to production. And over that 7-year period, they gave their shareholders 60% per annum compound return. Now, De Grey has moved fairly fast at the early stages of its discovery, but we would see that there's still long-term value creation to happen in De Grey long before they get to production. And one of the other things we've done in some of our other presentations is to actually show the analysis of the All Ordinaries Index, which has about 470 stocks. and in the last 7 years, only 20 of those have actually done better than 40% return than the 60% Gold Road's done. So that the sort of investment we've got into growth opportunity, it won't go in a straight line, but we're sort of only a 5 to 7 year hold. We see that there's a lot of shareholder value yet to come.
Thanks, Bruce.
If I could add to that, in that one of the fascinating aspects of the Malana Gold Province is that Hemi was discovered. There's actually, well, over the 200 kilometre strike, there's 4 areas, each of about 30 to 40 kilometres in strike, with gold mineralisation evident either within them or on the boundaries of them, which have had very little drilling. And because largely it's undercover, Hemi was the first of the 4 areas to be tackled in terms of broad scale regional exploration. And it's obviously turned out to be successful. So De Grey actually has 3 other areas, apart from its known resources of some 2 million ounces. It has 3 other areas of comparable scale to where Hemi was discovered that remain to be explored. So while that opportunity exists, DGO will continue to push for that activity to continue.
Thanks, Ed. And this question's probably for you too, Ed. An investor asks, can you please provide an update on the drilling on the Scotty deposit?
On Scotty well, we provided the update in terms of the silver values that we have received to date, and we've done some additional soil sampling, and we're currently reviewing those results. But we will be drilling. We will be conducting further drilling, subject to getting heritage clearance. Within the next, by the end of this year.
Thanks, Ed. Bruce, perhaps one for you on a corporate front. An investor asks, are there any more performance rights to come out of DGO, or are they all done, to use his phrase?
Well, there are some performance rights outstanding with a trigger price of $3, a small number held by a chief operating officer who's new to the company. There are some performance rights with a trigger price of $4 a share outstanding. I think there might be 1 million of those, and there's been no decision or discussion had at board level on the issue of any more performance rights at the moment.
Thanks, Bruce. Perhaps, Ed, one you might be able to take. Would DGO consider projects outside WA or South Australia, or even overseas, as well as other commodities?
Well, that's relatively easy to answer. Our focus is Western Australia and gold. It's unlikely that we would go overseas or look at other commodities apart from copper and gold. As I was reminded recently, where I live in Victoria is about one hour away from Fosterville, which clearly is one of Australia's best gold mines today. And should we be looking in Victoria? Well, we're certainly thinking about it, and we have got the Victorian government put up land for tender surrounding the Fosterville gold mine, and we, along with an associate, are clearly in that mix. For one of the areas in particular. So yes, we would look elsewhere. But the beauty of Western Australia is the infrastructure. Generally, land access is easier than it is in Victoria. Native title and heritage issues are pretty well understood in Western Australia. They take work, and we need to work harder on it. But Western Australia really is a very good place to explore, and as we've shown elsewhere, large parts of it are underexplored. And you can by investing cleverly in companies that have these brownfield land positions, we can continue on behalf of DGO, continue to create value, I think.
Thanks, Ed. One other question.
If I were just to add to that, can I add to that?
Absolutely, Bruce.
So we're a bit out of sync, you and I. Sorry. I'm just going to add to that by saying that, like in any industry, there are spots where there's conventional wisdom. There was conventional wisdom amongst the exploring community in Western Australia that you wouldn't find big gold deposits in the Pilbara. What we find interesting about our relationship with Sensor is it's using its technology on all the data that's basically the last 50 years of exploration data, and using a computer. The computer doesn't have conventional wisdom. Computers just have a statistical model, and it's identifying places where you would explore. And when they turned up the prospect, for instance, the prospect that we drilled recently with them, south of Sons of Gaulia, Ed's response was, well, of course, that's a good place to go look. And that land was owned by another company, but it would probably have been seen as a relatively low priority. So there are lots of opportunities in Western Australia. One of the things we've got to do is open our thinking to where you go and look. The thing south of Sons of Gaulia, 8 kilometres from Sons of Gaulia, on a known geological trend, we'd call that brownfield exploration. The prospect that Desdemona North that we've drilled actually has a previous hole, I think, drilled by Kin Mining, which has what Ed would call a discovery type intersection, which is more than 30 gram meters of gold. So there's evidence of something there. It's never been looked at properly. But the computer technology is taking away the conventional wisdom that sometimes stops us from thinking or learning. I suspect it's going to find some really interesting things for us over the next year or two.
Thanks, Bruce. One more question, perhaps, on a corporate front. Bruce, is an investor asks, what can you do to try to overcome the discount in the share price to the net asset backing that you referred to early on, particularly given your excellent track record, as the investor says?
Well, I love the question. I think the simple answer is probably discover something. Yeah, I guess, look, we haven't had the discount until recently. We've been a very tightly held company, and that's actually, there's been low turnover. And so if people want to buy, they've found that there hasn't been many shares for sale. The recent placement we did of $28.5 million has probably opened up our register a bit. And a few of investors have started to say to us, well, if you were to sell your De Grey holding, you'd pay tax. I think those two things are perhaps leading to a bit of a discount. We accept that. It's unlikely we would sell our De Grey holding. As we said earlier, we're a long-term investor in De Grey. The ultimate answer might well be that we get taken over by a major company who wants to get access to our entry point to the Pilbara and to the world-scale play that De Grey now controls. And a corporate transaction will involve capital gains tax for our shareholders, but won't necessarily involve tax on that holding. But I think the answer to the question is what we think we can do about the discount is actually have some discovery success, and that's pretty likely. We're drilling a lot of holes, so we don't know. One of them somewhere will come up with something, we think.
A final question here, Ed, probably for you. Given that the De Grey success has spawned so much activity, gold exploration in the Pilbara, do you envisage there being a round of consolidation among those companies in the Pilbara?
Look, that's possible. We as DGO have a clear view on not only the prospectivity of the De Grey position, but also the other companies that have land adjacent to De Grey and or adjacent to ourselves, to our own land position. Whether whether it's likely to be consolidated or not, it's too early to tell, really. What De Grey have done with the discovery of Hemi has certainly created a lot of focus, more so than the melon seed conglomerate rush that preceded it. And more work needs to be done, and some of the other companies are starting to do that, and have got good prospects. Whether they're ready for consolidation or not, is really depends on a number of circumstances, and I don't think any of those really exist at this point in time.
Thanks, Ed. Look, that concludes the questions, and there concludes the presentation. Bruce and Ed, thanks very much for your time today, and thanks to all those people who have joined us. We've got a great turnout here, a lot of interest in the company, which obviously reflects the success so far, but also the great prospects and unique proposition that you put to investors. So thanks very much for joining us, and we'll be back in touch with news of our next webinar. Thank you.
Thank you. Thank you.